If enough folks go to the bank wanting their entire dollar, remember that I mentioned that 90 cents of your dollar is gone before you walk out that door. That can cause what's called a run on the bank. What's going on? It's your brother, your Uncle Marv, and today on Money Mondays, we're going to talk about the recent collapse of SVB Bank and what that means for you and I and all of us as not only folks that have bank accounts, but those of us that are invested in real estate. My name is Marvin Oria, and I am a real estate professional here in Atlanta, Georgia, but I'm also a money guy. So all things that have to do with money, I'm going to talk about it on this channel. If you've been keeping up with the news in any capacity, you've probably heard of the recent failure of a bank known as SVB Bank. SVB Bank is an acronym for Silicon Valley Bank. This particular bank apparently focused solely on the tech sector as it relates to their investments, and they recently collapsed. And it's probably not a really good day if you are one of the many thousand people that had a bank account with SVB Bank. But you might feel like, you know what, I didn't bank with them, so whatever's going on doesn't affect me. But it could. It really could. So I want to watch this, show you guys this clip here, and then we're going to just kind of walk through what it means for all of us, and what are some takeaways and some lessons that we can learn from this. So be sure to subscribe to the channel as always if you appreciate content like this. So I'm going to go through this particular video, breaking all this down and what it means for all of us. All right, let's keep going.
The second largest bank failure in American history, and federal banking regulators tonight working around the clock to ensure customers of Silicon Valley Bank can at least get access Monday to the maximum $250,000 of their deposits insured by the FDIC. The bank, popular with tech startups and the venture.
So what happened with this bank, if you're just now watching or hearing about this, is essentially this particular bank, they failed. And how exactly they failed, because you would think, okay, this bank has all this money, how does this happen? So I'm going to show you guys something quickly as part of my, what we're looking at here. So this is $1, all right? It's $1, legit dollar. And you have a bank account, and you take this $1 and you go and put it in your checking or your savings account. The bank is only required to keep roughly 10% of its available accounts cash balances on reserve. So what that essentially means is this $1 that you put in, before you walk out of that building, 90 cents of this $1 has or will have already been loaned out for someone's mortgage, a business loan, a line of credit, HELOC, any number of things. So what ended up happening essentially is that so many people, so the news went out apparently that this particular bank was in some trouble. And they essentially tried to do like a fundraiser, but it got out, well, they were trying to generate more assets, and it got out that this bank was in need of additional assets or they were going to be in trouble. And so what ended up happening is that this company focuses solely on tech companies. And apparently a lot of these tech companies, instead of leaving their assets with the bank, these tech companies, because of the economy that we're currently walking through right now, the economy is not too hot right now. So these companies that normally would have kept their assets with this bank are now using those assets just to keep themselves afloat. And so what ended up happening is that this particular bank apparently took the majority of its reserves and invested it in certain segments of the market that are traditionally safer places to put your money, such as bonds. But now that we're dealing with a little thing called inflation, inflation just essentially means that the cost of goods and services, eggs, gas, whatever, is more expensive than it was, let's say this time 2 years ago. Because right now what we're dealing with, guys and gals, is that we're essentially trying to pay down the bill that we ran up during the pandemic. When the pandemic was going on, it was what it was. We didn't know what was going to happen with our world. So a lot of money was pumped in, and the cost of money was a lot cheaper. If you remember, if you're a homeowner, you could get you could refinance or buy a home, and you were paying like 2-point-something% interest. Well, now interest rates have now gone up. And the interest rates going up just essentially means that money is getting more and more expensive to borrow. So when that happens, bonds, whenever you hear about interest rates going up, they have a seesaw effect with bonds. And I know all this because, as I mentioned, I'm a money guy. So I've got, several licenses in the money space. And, as I'm just kind of watching the news and just kind of helping, the folks that I work with kind of navigate all of this, it's just, I'm not saying you should be worried or anything like that, but you just got to make sure you're keeping your eyes on all things the economy, because we're in for a hurting. We're in for a hurting as it relates to getting inflation down. So I just wanted to kind of walk through that a little bit, but let's keep watching the rest of this situation going on with SVB Bank.
Capitalists who invest in them.
I hope we get most of it back, but yeah, it's definitely concerning.
I'm pretty concerned. On a level from 1 to 10, I would say it's 7. 7.
Nah, he's concerned. If it was 1 to 10, his concern is 15. But we're going to talk about what are some of the things that, folks that are in this situation or affected by a situation, there's some light at the end of the tunnel. So we'll talk about it in a moment.
Long lines forming at branches across the country, with customers scrambling to access their money. Startup CEO Stefan Kalb worried it will take months to get the company's funds, forcing it to either go into debt or shut down altogether.
Unless someone comes in and is able to support Silicon Valley Bank through an acquisition, through other means, a lot of us are going to be in a very painful situation very quickly.
What he's basically saying is somebody's going to bail us out. So that's what happens with banks, man. They make mistakes with other people's money, and then they expect the government to bail them out. But let's keep going.
The tipping point coming this week when Silicon Valley Bank announced it was selling assets to shore up its finances. That sparked a run on the bank, leading to the FDIC shutting it down Friday.
So what a run on the bank essentially means is when, as I mentioned, your dollar that you put in, essentially 90 cents of your dollar is gone, because the banks are only required to keep 10% of the assets in reserves. So let's say you put your dollar in and you're like, you know what? I don't like this news that I'm seeing. Let me go to the bank and go get my whole dollar that I put in, because when I check my app, my banking app, it tells me that my whole dollar is in there. So I'm finna go to the bank and go get my whole dollar. Well, if enough folks go to the bank wanting their entire dollar, remember that I mentioned that 90 cents of your dollar is gone before you walk out that door. That can cause what's called a run on the bank, because more people are trying to get their assets and their money than what the bank has available. And so when that happens, banks can get into a lot of trouble. That typically doesn't happen because obviously if you're with one of the big banks, that's millions and millions of customers, so it's highly unlikely. But with Silicon Valley Bank, I'd never heard of them prior to this news. So they were a very, very niched bank. And so if all of their customers within their wheelhouse are trying to get the majority of their money out, that's definitely going to cause problems. All right, but let's keep going. We're almost done here.
Streaming giant Roku had $487 million, or 26% of its cash reserves in the bank, with the company's deposits largely uninsured. But one expert says this is unlikely to cause an avalanche on the broader banking system like it did in 2008.
I think the banking system, the broader economy are on very solid ground. I think the problems here are specific to the institution and the sector of the economy, the technology sector, that's clearly struggling.
The stocks of other
I agree with that. I do agree with that this is a situation that happened with a very, very niched bank that catered to a very, very niche clientele, which was the tech sector. So if you've been keeping up with the news, you've been hearing that the Googles, Facebook, Meta, and a lot of these tech companies, Tesla, they're going through a lot of layoffs. So if this particular bank catered to that segment of the marketplace, they're going to be hurting as well, because these companies are, they're not making money. They're strapped for cash. So do I think that something like this is going to happen on a broader scale? It's highly doubtful. If you're with the big bank, one of the big banks, you should be fine. But I'm going to walk through one more segment of this, and then I'm going to give you a breakdown as a money guy on what you should be doing or considering doing at this point. But let's keep going.
Banks that operate in the region did take a hit this week, but still they appear to be in a better financial position. As for Silicon Valley, FDIC claim agents are currently sifting through customer records to make sure that customers receive at least their $250,000 come Monday. Jacqueline Lee, ABC News, New York.
All right. So basically, as she mentioned, if you have a bank account and you have a certain amount, you are covered under something called FDIC Insurance. When you open a bank account, you probably heard about it. And what FDIC Insurance essentially is that if for whatever reason your banking institution that you're working with goes under, for whatever the reason is, then your money is insured typically by the state first and then the federal government second, up to $250,000. So if you have a balance of $250,000 or less, then you should be made whole by this insurance. That's part of every legit bank that's in America. Now, it doesn't mean that you're going to get your money tomorrow if your bank goes under, but at some point you will have the ability to get up to your $250,000 there. Now, the problem lies is that there's not a definitive timeline for when that's going to happen. Obviously, a situation like what's going on with SVB Bank has gotten a lot of national attention. So it's something that, the federal government has taken over this particular bank. It's gone under its control, the government's control. And so they have assured individuals that they are going to make them whole, I believe within the week or so. Now, individuals that have over $250,000, like Roku, for example, had $480 million. $480 million with this bank. I don't know what's going to happen, but what they've promised folks essentially is that they will get an advanced dividend on their money. So I don't know what exactly that means. If that means they're going to get some significant percentage of whatever they have over $250,000, at least until things kind of get sorted out, if the bank gets taken over or whatever. But this is spooky times right now. So, for me as a money guy, real estate guy, I'm all about diversification. I'm all about having your assets in multiple places. Personally, as a family and as a company, we bank with multiple institutions that are not connected with each other in any kind of way. We have several bank accounts for this reason, for different purposes. But, when we're kind of looking at this kind of situation, obviously, if you have a bank account, you're worried that, could something like this happen to me? Well, rest assured, unless you've got over $250,000, it's not a big deal. If you're with a big bank, a well-known bank, a bank that's, everywhere, you should be fine. The economic indicators are telling us that we should be good, holistically. Obviously, the situation that's taking place was isolated to this particular bank that catered to this particular type of customer, which was the tech sector. So you should be good unless you're connected to, like I said, that bank in some kind of way. And even if that's the case, you're going to be made whole in some capacity very, very soon, as long as you have $250,000 or less. So, my suggestion is to look at just maintaining your assets in different places, maybe some in cash, some in real estate, some in other types of investments that you can get to fairly easily. Don't be alarmed, don't be worried. I mean, obviously, we need to continue to keep our eyes on the economy and what's going on, as informed consumers should be. And if you are, hearing anything or seeing anything that, is of concern, you want me to talk about it, of course, shoot me an email, let me know. But as a money guy, as a real estate guy, we just gotta keep our eyes forward and just continue to stay optimistic. Of course, as it relates to inflation, they're going to have a conversation as far as Washington at some point in June is what my understanding of it is. So we're going to know what we need to do. I mean, obviously, as an economy, we got to get inflation under control. We just got to. It's getting more and more expensive to borrow money. That's obviously affecting, from a real estate standpoint, that's obviously affecting buyers and their ability to borrow, because they cannot afford to borrow money at a 6, 7, 8% interest rate. So we gotta, but the interest rates are where they are because of where inflation is. So I would just tell you, just don't watch the news every single day. Don't do it. It's going to give you high blood pressure and heartburn. But just make sure that you're checking out your Yahoo Finances. You're keeping up with this particular channel and others that talk about money on a regular basis, talk about assets and things of that nature. And I'm optimistic. I know that we're gonna get to where we need to get to as a company, as a country, but we're gonna have to hurt a little bit in the process. So if you got value from today's Money Mondays, let me know in the comments below. What do you think the Silicon Valley Bank collapse or potential collapse is going to do for other banks and other industries connected to this bank? Do you think it's going to have a positive effect? Do you think it's going to have a negative effect? Let me know in the comments below. And until the next video, it's your boy Marvin signing out. Are you a real estate agent looking to jumpstart your career? Join our online agent network and gain access to the support and resources you need to succeed. One of the most effective ways to attract clients in this industry is through social media. And I can tell you, in my entire time as a real estate professional, I have not knocked on one door, and yet I've still generated several $1 million worth of sales per year. And our team is here to help you do the same thing. Click the link in today's show notes today or visit IamTheTribe.com to learn more about this amazing opportunity.